we got some smart people sitting next to us here, Josh. Excited to have Spencer from Orange Cap and Moonbirds joining us, and David from Drift. Both of whom, I mean, I guess, Spencer, you're about to go on stage and do your talk. Drift, I know, has just been dropping all sorts of new things this week. So fast, so furious that we don't even know what the hell you've been doing. So we get to dive into that with you guys today, which we're excited about. So maybe just to start off, both of you guys have been building in the space for a number of years. I don't know if this is this Breakpoint a normal stop on both of your schedules? I'm assuming for Drift it is.
Pretty regular. This is like maybe my second time at Breakpoint, but yeah.
Yes. I mean, we're in front of an arena here, gentlemen. It's kind of next level stuff. They always do go over and above here with Breakpoint, but I don't know, it feels notable.
Feels extra this year, yeah.
Well. All right, so Spencer, I love that. I think a lot of the themes of the conversation this week has sort of been about the shift. It's sort of we had Kyle Simani on earlier today. You said it's big boy time. It's sort of this professionalization, the stepping up, and in many ways, and in fact, we were talking at the break here about the different vibe here at Breakpoint. I think there was a ton of meme coiners last time in Singapore, at least maybe the ones that were hanging out and talking with us, and notably absent here. I'm sure there's a couple pockets somewhere, but Spencer, you've somewhat recently acquired the Moonbird IP. You're sitting here wearing a Burb jersey, very clearly not the collared shirt that the rest of us are wearing here. I'm curious about your take on sort of where the crypto markets are right now, especially as it relates to collectibles, NFTs, IP, something that was very dominant on the timeline last cycle and is maybe not as relevant this time.
Yeah, I mean, I think like really the meta trend that I'm looking at right now is like real companies. I know that sounds a little bit silly because like you'd think that would always be what's valued, but in our industry, it has not historically always been what's valued, right? And so I think, for a very long time in crypto, there weren't that many companies, there weren't that many tokens. Any new token is good token. I think what we've seen start to happen, which is actually good, it's maturity. It feels bad to a lot of people, is like not every token's a winner. There's a lot of tokens right now that just kind of come out and all these kind of things. And so, like, as you said, put your big boy pants on. Like, who's really building a company that does real things, right? And I think because we have so many tokens, so many that don't succeed, like the pressure to be a company that is real, has real revenue, like is much higher than it's ever been. I think this is actually a healthy pressure. We'll see that over a bunch of years. Now, it's not good news for a lot of companies in crypto, because a lot of companies in crypto were relying on things that kind of go away as the volume goes away on their token, or as royalties went away in NFTs. But really, like a thing that I look for right now in companies is like who is focusing on real revenue, right? Like if volumes went down for an extended period of time, can they survive? Are they doing something that's productive? And for us at Orange Cap Games and at Moonbirds, like physical collectibles is sort of our play. Like we really focus a lot on distribution outside the space because it's counter-cyclical to all the like fun crypto things that we get to do as well. And I think what we've seen, you spoke about Kyle Simani, the public markets, right? Like the new bid for crypto is coming from the TradFi audience, is coming from the public markets people, is coming from those people who are used to evaluating companies on revenue, on all these things. Whereas maybe like earlier in the cycle or last cycle or last breakpoint, right? You saw a lot of things where like, okay, how much hype can I generate is the main proprietor of success. Like nobody cares about the underlying company. It's just like, are people talking about it more is the only thing that matters. And I think maturity for crypto and our industry, there should be more things that matter than like, is it just hype, right? That's always gonna be a part of it. I don't think that goes away, but like, are there real companies being built? Do they, crazy concept, make money? Right? And can they use that money to perpetuate their goals in some sort of sustainable way that isn't extractive exclusively to the ecosystem, right? And I think that maturity is very painful, but we're going through a maturing moment as an industry. And the beauty of this moment is, as weird, dark, or difficult as it might feel, it doesn't feel existential in the way that past, crashes have, right? Like when FTX collapsed, I was like, the industry might be over, right? This is reasonably, we might just pack up and go home. I don't think there's that risk right now. Nothing right now feels anywhere remotely close to that.
I feel like that's a hard thing for folks who maybe have come in fairly recently and hadn't had those previous experiences. And I think for many, it's just like actually does feel a little muted as far as the lack of existential dread is a very different feeling. And it's why I think many people are even questioning whether this is a bear market right now or not. Clearly, one of the big business models that are working right now is trading, perps, etc. David, I'm curious your take on sort of the evolution of the market over the last little while, especially as it relates to the category you're in.
No, absolutely. I think, look, trading has always been around. It always will be around because A lot of folks are just born speculators. Everyone has that desire to chase that 100x, and that's just human behavior. That's always going to be around, just takes different forms, from where it were centuries ago to just now digital trading. So it's more of an evolution in that sense, so that behavior never changes. I do think that the types of people trading are definitely different now. To your earlier comment, the folks that are coming on board are much larger. All of a sudden, there is some correlation between Bitcoin, Solana, crypto assets with traditional assets, because when liquidity goes, it all goes. It doesn't just selectively disappear in one place and another. So I think it's been quite reassuring to see that this technology is being well appreciated by large institutions who 5 years ago may not have been here. I mean, Breakpoint was in its first edition, and I can assure you the people there were very different to the people that are here today. So that's sort of one just soft barometer metric for how things have evolved. So ultimately, it's just the principles are the same, but some of the participants may have come and gone during that time.
Yeah, David, I'm curious how it's felt being, a very early mover on perps, really serving kind of the core crypto native audience that, wanted to trade in different ways. And then kind of this throughout the last year, perps become this like very clear, massive opportunity that is, breaking out well beyond crypto. And, people are talking about it as kind of this new killer, maybe market mechanism that's going to, take over TradFi. Like, how has that transition felt, and what have you guys had to do to kind of keep up with that trend?
It feels pretty, I guess, liberating and somewhat, you feel kind of vindicated in a way. And I say this sort of somewhat jokingly in a way, but with some truth to it, because, a lot of the significant financial moments of history are defined by parts of financial transformation. If we sort of peel back 30 years, you had, KKR doing LBOs. You're using someone else's balance sheet to buy companies out. It was never possible. You had junk bonds that Milken was doing, packaging bits and pieces and creating extremely high APYs. Some of that has made its way to crypto as well. And now for the first time, this contract that never really settles. There's no expiry. I mean, I think the financial transformation element of perps has been so unique, and it just does so much for the existing system where all things have a dated futures S type of style. So that, I think, is being embraced slowly. I mean, obviously, any new product is going to take time to get comfortable with. What are the risks? And I think we've seen a lot of risk systems get challenged earlier this year. And it just goes to show that there's obviously a lot more innovation, but the benefits are pretty clear for what it can offer.
And Spencer, how are you guys thinking about the big opportunity with collectibles? Like, is this kind of new fundamental asset class, or do you see it more kind of fitting into this new kind of game environment where you can design new experiences? Like, how are you guys approaching that?
Yeah, I mean, I think like if you look at what is growing outside of crypto, like collectibles are really having a moment right now, right? Like PopMart is a really, really big company. I mean, PopMart is bigger than Hasbro, Mattel, and Sanrio combined, like as a company. And that's a pretty crazy kind of breakout success that's happened. If you look, Sequoia Asia basically only invests in collectibles companies right now. And so the growth in the Pokemon market, the growth in like One Piece, their IP is majority monetized by trading cards right now. Like that's a crazy thing to say. Like, so if you look at like, where do we need, like what needs to happen in crypto is like, we need more people to come into crypto and we need to be able to do more interesting things with those people, right? And so if you look at like the intersection of bring more people into crypto, I think like intellectual property throughout history is something that brings people in places, and collectibles are the thing that is growing the most within intellectual property expansion. It just makes a lot of sense with like product market fit. I think kind of in a weird way, like you're saying, right? Like perps is a much more natural evolution than options for most people, right? Like where options are confusing, perps are interesting. It's like an even dumber version of that is like collectibles. Like you don't have to, it's not hard to rip your, like this is a cool thing and it sits on your desk and like you're like, okay, this is top of mind, right? It's just, it's more accessible. And I think like a lot of this cycle has been like, how do we take crypto from like conceptual like tech into like actionable like real things, right? Be that products that they're using, be that like physical things they're interacting with that bring them into the space, right? Like these things matter.
You sort of see, because I think Orange Cap Games, gaming in crypto is maybe the exact opposite in sort of the adoption curve or the excitement curve than perps, where there's like the trough of disillusionment. Maybe it just continues to sort of extend. There's I think a ton of money that's come in and really not a whole lot to show for it. I'm curious if you sort of see like this sort of Web3 gaming opportunity, or is your sort of focus on collectibles like a learning and evolution from what hasn't worked and into something that might work?
I mean, so like our first product we launched was a trading card game, right? But like that is both a collectible and a game. But I would say like the more important side of that probably is collectible, right? Like as you're sort of mentioning, like crypto gaming is probably the sector that's fallen off like the most, right? And I think this idea of like just making a game studio that on its own succeeds the game is really tough, right? But like trading card games, while they are games and are, I'm very proud of the game we've developed and it's very good. Like our second product we launched was like blind boxes, right? And like trading card games actually can survive in a little bit different way than like your traditional like crypto digital game, because like it is this physical product that sits on shelves, it sells, it has its own revenue that you release in seasons. Like it just is set up better to succeed than most types of games. And I think a mistake is like there have been a lot of trading card games in crypto that are digital only that never made the physical component. And that physical component is not only such an important part of your monetization pipeline, it's also a really important part of your like distribution, right? Like you cannot put a digital game on store shelves. Like one of the majority ways that we distribute our product is it being on store shelves all across the world, right? And like you just can't do that with a purely digital game. I think people get sometimes too excited about like what is the purely digital experience that can happen, whereas like this digital to physical interaction is really interesting. And as we increasingly have more and more digital elements of our life, like things that pull us out of it are actually more valued, I think.
No, I agree with that because I mean this is just something to share and a fun fact. But I played card games professionally about 4 years ago, and the dopamine of ripping that pack, hitting just like $1,000 card, just hits differently to.
Which games did you play?
I played Dragon Ball, I played One Piece, and I played Pokemon as well. And I feel like that hit for me hits differently to closing $1 million per position. And it sounds weird because notionally one is significantly bigger than the others, but there's nothing better than the last card is shiny. I think that physical element is slow. It was, I think, dismissed for a little bit because there's costs to that, inventory costs, distribution, logistics, all the overheads that one would love to do away with as an operator. But ultimately, that that connection with the person is massive. And I'm definitely the guy that goes and buys packs and boxes, knowing that hey, it's literally lottery, but that hit you get. You can't describe that. It's like very special.
Are you thinking about bringing elements of that into your mobile perps product that I think you just announced?
I think so. That's exactly it. It's like if someone closes a position with a loss, like say you got liquidated or you're down, but you should have a consolation prize, because the worst thing we can do to user is you churn the user and they never come back. How can you make them churn but feel good churning or feel good being like, you know what? It's like people going to the casino. It's like you might lose, but you somehow keep coming back. I mean, if we gave you nowhere to come back, like that's on us, right? We've just lost the way. We've lost a lifetime customer. So these kind of boxes, for example, something we're actually thinking of doing is, let's say you get liquidated for maybe 20%, you could be eligible for like a wooden spoon prize, those kind of things. I mean, it's that kind of experience, like how you're made to feel versus the loss necessarily, because you know what you're getting into when you're trading perps. So if you're doing 100x, you probably should be losing. But if you're losing and you're having fun doing it, maybe you might do it again and again. And obviously, gambling sort of pursue your own risk type of thing. That's just psyche. It's like, what is that hook that makes you come back? What is a human experience? I think that's actually a lot of overlap between perps trading and collectibles. Is that it's ultimately just the interaction between us and the point of consumer.
Well, I think that's what's been so interesting about perps. It feels like this very fundamental improvement of markets in many ways, but the kind of early adopters of it have really come to it for kind of entertainment purposes, right? They want to go 100x long and see if they get liquidated or see if they make a bunch of money.
It's a hit. That hit is so big for a lot of people.
So, I mean, is retail kind of your core target audience you guys are building for, or is kind of the institutional audience an important piece of it too?
It's two different products. I mean, the retailers are looking for the 100x. If you're Fidelity, JP Morgan, you probably shouldn't be offering 100x. So I think also the time horizons that they're holding things are different. Retail traders often shorter duration, intraday, intra-week. Institutions are hedging out for months, years, as part of a portfolio. So your goal, your horizon is very, very different. So as such, they should sit separately in terms of how it's presented to the user. So a lot of users might look at a 10% APY and go, that's too low. But to any hedge fund manager, 10% on $10 billion is a lot of money. So it's all perspectives.
So is that part of the strategy with the mobile app specifically, is that you're able to kind of bifurcate your product offering in a meaningful way and like kind of serve those independently?
Absolutely. I mean, when a token crashes or the market goes down, we all pull out our phones, we have a look at it. We don't, oh, wait, let me go to the desktop and check it. So, I mean, even that as a behavior is something I personally do as well. So that's definitely more targeted towards the retail. And I think also just thinking about the people that we're serving. I mean, these are, the beauty of decentralized finance is that anyone with an internet connection can connect with Grift. So if you're in parts of Latin America, parts of Africa, Vietnam, you can all connect. And for those countries, your phone is your computer. It's like it is your device that you get by on. So, why are we building for a desktop experience if they don't even have a desktop? So I think that's what drives the mobile for us.
Spencer, I'm curious if trading is really the core of your business. If I think about the growth in Pokemon, it is sneakers or whatever. It is really the sort of like emergent market dynamics. It's the live deals being done, or the clips on TikTok being done, as people are buying out the entire table, etc. How much of sort of how important, I guess, is sort of approaching collectibles and game design from a trading experience for your success?
I mean, the secondary market for collectibles is like really vital to it, right? In the same way the secondary market for all sorts of these kind of products are. One of the things we track very closely is what's going on eBay on the secondary market for our cards, individual cards, booster boxes. We had a sale at Golden Auctions recently that went for $12,200, like for a single card. That's on par with what like a first edition like a Japanese no rarity symbol Charizard would go for, right? That's like what an unlimited Lotus would go for. Like that's a very meaningful sale, and that brought a lot of collectors in. The beauty of physical collectibles is they're way more annoying to sell. So the circulating supply is effectively lower, right? So like one of the big problems that crypto has is it's way too easy to sell stuff, right? Button, gone, wow. But like, oh my goodness, how many crypto people that buy collectibles are going to take it and put it in a box and like list it on eBay and then buy a shipping label and then take it and bring the shipping, like it's just like, it's actually this beautiful thing where it's like the dream of every like protocol that launches a token is that their token is this hard to sell. And so, I joke about this, but like it's actually been part of the success. It's like our crypto collectors of our physical collectibles like are really great collectors, right? And again, the goal is it sits on the shelf. Like, yes, I love the secondary market, but I actually much prefer people who send me pictures of like, here's like cases of Pokemon, cases of One Piece, cases of Vibes, like that is their closet, and like, or they're sitting there with their kids ripping it over. Like this is just, your kid pulls a rare card of a pack that's never hitting the market. I mean, that should never hit the market if you're parenting correctly. This is my opinion, but like,
I'm interested in what you both think about the long tail perps opportunity. Like maybe thrown to you, David. Like, I think with Hyperliquid and HIP3, we're seeing a bunch of experiments kind of emerge around, I mean, collectibles perps, stock perps, pre-IPO perps. Like, is that going to be a massive market and one you guys want to participate in?
I think so. I mean, it all comes down to just market structure and what that opportunity represents. I think long tail is always interesting. I think what you need to think closely about is sometimes what is quickly exciting can be quickly unexciting. Mm-hmm. And it's like, what is the sort of cost benefit of listing something, investing in it, doing the setup for it? But in that moment, and you sort of your thesis, the way you're underwriting is that in those 72 hours, does it make enough commercial sense to pursue that versus something else? And more often than not, in this space, the answer is yes. Like that flash in the pants, like everyone talks about it. It's like the only thing. It's like you're kind of glued to the sun, like it doesn't move, and that's the moment. But then it goes just as quickly, and we've seen that with just the very quick waves. Unfortunately, everything that's virtual comes and goes very quickly. So I think philosophically, how we think about long tail perp markets is, look, there's a place for them. They should be isolated from any sort of main market, because ultimately the people who are engaging with these long tail markets are probably very different from the people that are trading these bigger markets, and you should just approach them accordingly. But definitely space them, and there's definitely a very active group that are looking for it. They're looking for not just the meme coin itself, but leveraged meme coin exposure.
Yeah. And Spencer, are collectible perps something you think is additive to your product experience?
I think dodgy idea. Collectibles perps. The collectibles are very like one of the main things that defines like why perps work is that there's a market where the perp itself shouldn't impact the market and shouldn't be enough of an incentive to like move price of the underlying asset, right? And I think that as I just explained, like most collectibles are a lot less liquid and a lot more concentrated in their ownership than you would think they're to be. And so I think it's something that will inevitably happen, but I wouldn't be rushing to the door to do it, because I think that the reality of collectibles is they do not trade frequently enough to be priced enough where like there's not depth of liquidity against supply for those who hold them, where like you end up with a lot of like really kind of odd incentives, right? I think that's one of the things that's like really interesting about crypto and just markets in general is like there's all these base assumptions that you take from like traditional markets, right? Like the stock market, which like many of the stock market assumptions apply to crypto, but like as we've seen, like crypto has acute liquidity crunches in a way that the traditional markets don't really have, right? Like this is an assumption that like breaks sometimes. Like if you think that was bad, collectibles have even more acute liquidity. Like there are many assumptions that just don't hold as you like increase esotericness of each of these. And I think that's like, I think 1011 and 1010 was like a big moment where we saw a lot of like various products either succeed or not succeed based on like, were their assumptions all correct? Because that moment that happened in the liquidation cascade really blew up a lot of the base assumptions of like how a market works, right? And so, I think like as you get more esoteric, you see more of those risks, and they're not that long tail, like they happen. And so, I think that's like maturity as we continue to, do these kind of products, be it in collectibles, be it even in majors, right? Like one of the major ways, like I think that this is something that we will continue to see evolve, right? Like I don't know if you guys remember, but like when FTX collapsed, one of the main ways they washed a lot of money out was through like GMX and like swapping ETH to like wrapped Bitcoin and stuff, and like manipulating the price on GMX and taking it out of the liquidity pool because they couldn't like directly transfer the Bitcoin out. And like, I think we've gotten to a point where a lot of the like insurance pools against like perpetual protocols now have like some concept that protects against that, right? Like, this is a maturity against like the last version of this. Now we saw 1010 happen. I think there's a lot of like introspection. I'm sure you guys have thought a lot about.
No. I mean,
that.
that's exactly it. I mean, I appreciate this, the generous segue, but of 1010, I'd like to think Drift did one of the best, given all things OI total volume, because we thought about insurance fund. I mean, when you think about an insurance fund concept, there's what, $35 million in an insurance fund, and essentially before you do any type of auto deleveraging, when you're cutting people's positions manually, there should be a backstop that you as a protocol providing, and that grows over time. This 35 million wasn't grown overnight; it's grown over 5 years, and we have that. And very few protocols have an insurance fund. But even then, the insurance fund is a last resort, and any sort of subsequent socialized loss action is the last resort. So I feel like, in these times, these are the watershed moments for like what works, what doesn't work. Because again, to Spencer's point, everything goes. When it goes very quickly. It's like it's a vacuum, and all of a sudden you might have massive gaps, and you just have to. I mean, what happens is no one thinks about the black swan until the black swan comes, and it's that one black swan that's going to wipe you out. So it's an interesting game theory there.
I mean, do you agree with what Spencer said, that perp shouldn't drive price discovery of the underlying asset? Because I think there's been so many cases in crypto where the opposite has been true.
I think you've seen a lot of manipulation for how perp synthetics operate, and I think unfortunately a lot of clever people in the room who are much more clever than I am have exploited that. You're trying to squeeze a certain market, corner a market effectively. We've seen this kind of behavior before, where some of these like low float, low cap, smaller coins, you could buy up a lot of supply, drive it a certain way, and then potentially exit in, that exploits protocol. I mean, that's very unfortunate, but all those things shouldn't be allowed to take place in the first place, and it's up to the protocol operators to think that. But unfortunately, I mean, it does happen. It's happened many times, and it will sadly continue to happen.
Yeah, the entertainment value. I remember sitting at my desktop watching that happen, and yeah, maybe not my favorite type of entertainment, but it was entertaining nonetheless. I know you guys have had, David, a whole host of announcements this week, and I would love for you to maybe go into a few of them you think are the most impactful moving forward. I think you had mentioned a new token or incentive model for liquidity that is notably interesting to me. Can you expand on the opportunity
absolutely. So we have this program that we're introducing called Drift Liquidity Program, a liquidity provider rather. So I think one thing we observed that was very successful was the Jupiter liquidity product, where anyone for the first time could buy this JLP, which is an index, no management fee, again, financial transformation, an index of BTC, Sol, ETH, and that would take the opposing position of any trade when you on the Jupiter platform. And as part of the risk you take for taking the other side, you get paid a certain amount. And that was very profitable. I mean, the price per share is probably up 5x from where it was. But the issue with JLP is that it's a lot of beta exposure. If Bitcoin, ETH, Sol goes down, then JLP gets correspondingly affected. So we essentially did a similar version to how JLP works, except it's more hedged out so that the return profile on it's much smoother. So for users who might not want to be betting on a perp, saying I want to go long Bitcoin, long Sol, short ETH, I'm not suggesting you should do that. You can essentially be a participant in the token and be representative of the house. I mean, that's essentially what we're betting on is, over time, this will accrue enough fees, the markets will mean revert over time, and it's just a different way to express a position. And it fits a certain group of users who might not want to directionally trade a specific set of positions. So I think that just caters to a different group of users who want a certain thing that's different to the trader, but it helps supplement the entire ecosystem. So we think it was a very elegant way to tie that all together, to tackle a very different group of people who might not directly want to punt long.
Interesting.
I have a question. Do you think perps are better than options, or do you think that perps are just like options for people who don't know how to solve black shoals?
I think it's a very extensive question. So I'll break it down. Two parts to it. Retails should never touch options. I mean, the concept of strike price exercise, like you're keeping track of many things all at once, and if you don't manage any of those correctly, you're going to be wiped out. I think that options are a very important part of people's portfolios. It does represent gamma, a level of convexity that you just don't have. Perhaps it's somewhat linear in terms of the leverage you can take. It's 3x, 5x, 100x. So as part of a portfolio for large institutions, it makes total sense for how they think about things. But then for any retail person, unless you feel very good keeping tabs on all those things, and even just the option alone has 3-4 components, you really shouldn't be touching that. And I think, for better or worse, a lot of early Robinhood users could only get leverage through options.
Yeah.
And that was the most widely used product. And then Robinhood was very clever to monetize that massively because it said, look, the payoff is this, but the underlying, you don't really understand how that works. And I think that gap is something that can really hurt people.
So we're talking about management here, and I've done an atrocious job of managing time for you. Spencer, I know you have a talk to go give. It's 1 minute to 4 o'clock right now. So
All right.
I think we have to wrap up right now. I think both these guys have, you have a talk coming up. So if you're watching us live right now, get your butt into the cinema arena. I mean, what a crazy space. You're going to have a lot of fun there. I think for Drift, you got to go check out their X account, because if you're interested in this category, I mean, you guys have been cooking. You guys have been cooking. Way more that we could get into here. I didn't think I was going to be as infatuated with this conversation and lose complete sense of time. So maybe we have to go do this again on our normal live stream at some point. But appreciate you guys hopping on. We'll let you go right now and get back to the craziness. And I feel like we're leaving it on a cliffhanger here in some way, but maybe that's a good thing for entertainment value.
Part two. Let's
All right,
go.
guys.
Part 2.
Appreciate it.
Thanks, guys.
All right.
Thanks for having us.
I'll play in
Thank
One
you.
Piece next time.
Please.
Oh yeah, that's what we do here
We
next
do it on
time. I like
stream.
that. Yeah, awesome. All right, guys, thanks so much.
Metaplex. This clip brought to you by Metaplex. Launch tokens and NFTs on Solana and the SVM.